From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. Today we're diving into creative financial strategies that could help you buy a vacation home or that rental home without relying on traditional loans. So whether you want to invest in a second home or a rental property, there are several ways to get creative with your finances. First, let's discuss using your brokerage account as collateral. If you have a significant balance in your brokerage account, you can use those investments to collateralize a loan known as a securities-based loan. The advantage here is that you don't have to sell your investments to access your cash, so you avoid triggering any capital gains taxes. This can be especially helpful if you've seen significant appreciation in your investments, but you don't want to sell and lock in any of those gains. You borrow against the value of your portfolio and typically pay a lower interest rate than a traditional loan. But there's a risk. If the value of your portfolio declines, you could be required to repay the loan faster or sell assets to cover the loan. It's essential to keep an eye on your investments and ensure you can cover the loan if necessary. Next, let's talk about life insurance. If you have a permanent life insurance policy like whole life or universal life, you may have the option to borrow against the cash value of your policy. This can be an attractive option because the loans are typically lower interest and flexible. So unlike a traditional loan, you don't have to pay the loan back on a set schedule, and the loan is not considered a taxable event for income. So however, keep in mind that if the loan isn't repaid, it will be deducted from your death benefits. While this can be a great way to access funds for a vacation home or a rental property, it's important to weigh the potential impact on your long-term financial goals. Borrowing from your life insurance can offer a tax-advantaged way to fund real estate investments without touching your other assets. Finally, as a last resort, let's talk about borrowing against your 401k. Many people don't realize you can actually borrow from your 401k to fund a real estate purchase. The rules allow you to take out a loan for up to $50,000 or 50% of your account balance, whichever is less. The beauty of borrowing against your 401k is that the loan is paid back to yourself with interest. That's right, the interest payments you make go right back into your own account. So of course, there are some important considerations. You'll have to pay back the loan back within 5 years, and if you leave your job before it's paid off, you may be required to repay the full amount of the loan immediately or face penalties. But if you're able to manage the loan terms, this could be a great way to access the cash you need without liquidating any assets or incurring any taxes up front. However, in my opinion, it's never a good idea to borrow from your 401k unless you plan to use it for an investment or something that will help build you wealth. Borrowing, for example, to pay off a credit card isn't advisable. So today we discussed 3 ways that you can purchase that vacation home or rental property. So if you have any questions regarding this, feel free to give us a call. We're always here to help. Stay tuned for Fox News Sunday.